Hello and welcome back to Slot Leader. I'm your host Umed Saidov, and in today's episode, we are going to be talking about stablecoins on Cardano. My guest is Andrew Westberg. He's an Cardano OG, who's been involved in many different kinds of projects, but I think he's most known for his involvement in USDM, which is the Cardano native stablecoin, and the upcoming Shield USD, which is going to be a featured sort of US a stable coin that will be available on midnight. In today's conversation, we are going to be focusing on USDM exclusively. We are going to talk about how the markets work in his views, how the liquidity moves in and out of Cardano, and what kind of challenges and opportunities a project like USDM has in the current conditions. We definitely touched upon the introduction of USDCX and how it changed the dynamics in the Cardano ecosystem. They last time I checked, they were the first ones. A blockchain with the highest sort of volume or total value locked, but it looks like it fluctuates, so you shouldn't take that as an absolute truth and whatnot. But it's good to see some variety of stablecoins coming into Cardano, because this is how the money moves. So this is going to be an amazing interview. I hope you stayed back and tune in to the interview that we had. Definitely, Andrew is one of the top-notch engineers, and he has a really good grasp of how things work, and he's been in Cardano for a long time. So he's got a lot of insights on from his side. But before we go into the interview, I wanted to kind of touch upon a couple of things that have been happening on the crypto industry, or tangential to crypto industry. And so I'm going to start with the war in Iran. It's basically economic, geopolitical sort of event that has been kind of moving the prices, not only on the traditional markets, but also has spilled over to the crypto. As you know, there have been a lot of on and off talks. And it looks like the latest tweet that I saw today, April 15th, is about, attributed to Trump, apparently. I haven't checked the sources or attributions, but it looks like Trump is ready to move on, and there may have been some sort of an agreement to stop this war. Bitcoin has been going up, I don't know, in response to this kind of ease in relationships, or maybe some other things that are coming into play. We can cover them later, but it's good to see the pickup in prices, because we've been going down for quite a while. So it's a welcome sort of change in that direction. But the second thing that I wanted to discuss was the Clarity Act. It looks like it's moving in the right directions as we speak, and hopefully it will get to a point where it will get passed. I saw a couple of tweets that by this summer it should be passed, and if it does, then there's going to be lots of activity being unlocked. The activity will take place involving the influx of money from traditional finance to blockchain, to look for risk-adjusted returns. Again, crypto is a place where you could find really good use cases, really good applications, and then also there are a lot of speculative assets. So it's going to be interesting to see how the institutions will move in this space, and what kind of discernment outside of Bitcoin and Ethereum, that's what they've been exposing themselves to, they will bring to the table. And I think it's a good development, because my personal view, as somebody who's been in the investment industry for over 20 years, the more eyes you have on an industry, the more economic incentive there is for financial and analytical minds to take a look at how things work, and look at valuations. The more precise the prices will get. So as long as you have good convictions and you believe in certain projects, I think you might have some tailwinds. That being said, this is not an investment advice or financial or tax advice, I need to say. This is just my opinion that, it's going to be a great development for crypto industry to finally get integrated into the financial system. Oh, so I would like to say for the crypto industry to eat the financial system, because this is where we're going, in my opinion. So that's the Clarity Act. By the way, we touched upon the Clarity Act and how it actually affects the influx of stablecoin into the platforms like Cardano. So if you watch the interview, I hope you watched the interview. You will find out how one of the players in this industry thinks about this particular issue. The third thing that I wanted to kind of touch upon is the upcoming change in the leadership of the Fed, and that change is going to take place, I believe, in May. The new potential chairman of the Fed, it's been posted on Twitter that he has a lot of exposure to crypto, which bodes really well for the crypto industry. I think if you have somebody as a chairman of the Fed with a lot of power, a lot of influence, that has this kind of personal conviction about the space, it really bodes well, because at the very least, this institution will be open to integrating with this technology stack. In my opinion, it's inevitable, because it's compared to what we use currently, the way the money moves, the way we have to transact on a daily basis with all these lags and latencies built in. I think it's a no-brainer for the blockchain industry to take over. My prediction is that once we start integrating into the financial system, there will be a lot of demand for block space. And again, I think there will be a lack of block space, because there will be a lot of demand for money to move in and out of crypto, and some blockchains, they're just not equipped to basically settle on chain every single transaction or every inflow that is coming in or outflow. So maybe there will be some intermediaries on the traditional financial side with, similar to what we have in SEXs, centralized exchanges, where they will have a separate sort of ledger where, they will settle things and then, will commit the state to the blockchain periodically. Or I think there will be a decentralized sort of the emergence of decentralized routers. Again, this is something that I've been toying with. Imagine you are a large institution, you want to move USDC from your wallet to a wallet somewhere in Ethereum, and there's several tranches, let's say, right? Or a lot of transactions. And maybe there will be a piece of technology that will allow you to basically route those transactions to the cheapest blockchain that will, at the end of the day, settle on Ethereum, on the wallet that you want. So maybe something like that will come up or emerge. This, again, this is not a very well thought through sort of concept. I don't know if this is even technically possible, but I think if it were, this is where we would go as an industry, because there will be a shortage of block space, and shortage of block space in Ethereum or, Avalanche or Solana. At some point there will be a capacity throughput problem that will have to be resolved. And to resolve it, you have to go to lesser known blockchains in order to process transactions. So that's kind of my idea about how the traditional financial industry will move value and integrate with crypto. And I have to say that crypto has come a long way, and I've been here since 2017, and it's come a long way in terms of processing transactions, in terms of how fast things move. Definitely not without some compromises, especially on the Ethereum side with L2s and their admin keys and things like that. But I mean, this is kind of a, one of the architectures and one of the ways to reach a consensus. And another way is the Avalanche's, which I really like. Avalanche's L1 sort of solutions. Their approach is that not every single type of transaction needs to settle in the main blockchain, and you don't have to, if you're an institutional player, you could have your own blockchain with other players, and but they could be automatically interoperable with other blockchains within the ecosystem of Avalanche. For instance, if you want to send value from your closed, let's say, blockchain to an open blockchain somewhere else, it automatically takes place. There's secure channels that take care of that. You don't have to do anything like that. And if you want to, transact and have certain requirements regarding latency and throughput, you could parameterize those by playing with the number of nodes, consensus mechanisms, et cetera, et cetera. So I think that type of architecture really bodes well for enterprise adoption and institutional sort of adoption and whatnot. That being said, all these things have their own, trade-offs, and there will be some, if somebody wants to do absolutely secure transactions, they will probably use the the L1s, the original L1s. In Avalanche, for instance, it's a C chain, X chain, or P chain or whatnot. I don't think P chain is used for transactions involving transfers of value, although it might. But anyway, if not, then they could just venture into different kinds of chains that are managed by a group of companies or a group of individuals or whatnot. So that's kind of, I think, where everything is going to go. But turning back to the question of Fed, another interesting tidbit that came across my desk is that apparently Trump basically saying that once the new chairman of the Fed, with high likelihood the current candidate, is going to be appointed, the interest rates will go down. I think this is kind of expected because the interest rates are too high for the United States government to basically to service its debt. It's just like a mortgage. When your interest rates are high, your interest payments are really, especially on in the beginning of your mortgage, basically constitute a whole big chunk of your payments. So you're not really paying down the mortgage, the principal. So in the case of the United States government, they issue a lot of bonds, they finance their operations, and then if the interest rates are really high, then they have to pay to the holders of these bonds a high interest rate, and that kind of creates a problem for the government because the spending increases every year and whatnot as they issue more debt. So there's an incentive to bring down the interest rates. The mechanism that's used to bring down the interest rates is one of them, at least, is actually changing the federal funds rate. It's just the rate that banks use to basically price their loans for the consumers. As it goes down, so does the cost of borrowing, and that affects the bond markets also. So if the bond markets have a low interest rate, then the government definitely can issue bonds, pay down the ones that have the high interest rates and roll it over to lower interest rates ones. So by that they can reduce their expenses. So the problem with lower interest rate is that lower interest rates you might create a pressure on the inflation, and the inflation is something that the Fed has to kind of manage. In the past, it has always tried to stay within the 2% sort of a rate, because that's something that they declared at some point as healthy. But it doesn't look like it has come down that much. And I think part of it is geopolitical risks and things like that. The oil price, when it goes up, it kind of like sort of trickles down. The higher price of oil trickles down to everything else that we buy, and therefore the inflation pressure goes up. But I think, expectation-wise, I think we're going to have some easing on that front too. So that's kind of a good news. If I were to basically make a prediction, what's going to happen between now and at the end of the year, I think we would see some easing on the financial market, on the interest rate side, and by extension some maybe reprieve in the asset prices, being homes or crypto or what have you. So that being said, this is not a financial advice again. So or financial, tax, or legal advice. So this is just my opinion that I'm sharing with you, my viewers. But anyway, I guess we're gonna go into the next segment with my interview. I hope you enjoyed this episode or this segment. If you like the type of content I'm putting out, please don't forget to like and subscribe, because it's very important that we deliver content that you like, and if you have any suggestions or recommendations, the comment section is always open, and we definitely would like to take your comments and suggestions into consideration. And thank you so much for watching this podcast. Hello, ladies and gentlemen, and welcome back to Slot Leader. Today we're exploring another interesting project on Cardano. My guest is Andrew Westberg. He's a good friend that I've known for a long time in the Cardano community, and I'm super excited to introduce him today to our guests to talk about the projects that he's working on. Andrew, welcome to Slot Leader. Great to have you here.
Thanks for having me, Umed. It's good to see you again. I know we've gotten to hang out a few times in person, but it's always good to stop by here and have a conversation.
Awesome. Just to get our users familiar with what you do, because you are involved in so many things in Cardano. It's like an OG with a lot of hats. Can you introduce yourself to the audience, and maybe we could delve into the latest projects that you work on that are of interest?
Yeah, so I started way back in the day as a stake pool operator on the incentivized testnet. I was not planning to do anything major in Cardano at the time. It was just like, oh yeah, I've got a server. Okay, I'll spin something up and play around with it. And then I ended up writing some code that kind of made me a central figure in that ecosystem. And then I just kept going a layer and layer deeper, ended up leaving my job. Been on a number of different Cardano projects, but the latest one is I work for a company called W3I. W3I is the technology company behind stablecoins on Cardano, namely the USDM stablecoin. You may also have heard of a company called Moneta. That's not the company I work for, but that is the issuing company for the stablecoin. So there's kind of a legal separation between the company that owns the intellectual property, that's where I sit, and then some other people on the compliance side and the token issuing side sit over at Moneta. So that's kind of what I've been doing, is building out USDM and maybe some additional stable coins we'll talk about.
All right. Well, thanks for the introduction. I think stablecoins are a very hot topic these days, and it's been discussed many times in Cardano in particular. The effort to bring USDC has been, a sticking point between the users and maybe IOG and Charles himself. And the fact that we have USDM is actually a milestone that needs to be celebrated. The other day I was looking at how much, what kind of stable coins exist in Cardano these days. And obviously, USDC being a more recognized version of stable coins has taken a lot of traction, but USDM is a close second. And why don't we talk about that?
Yeah, I'd like to correct you a little bit on that. So we're a close second sometimes. So sometimes there's more liquidity in USDCX. Sometimes there's more in USDM. Sometimes USDA pulls ahead. So it's kind of always in flux. But the one area that I think is overlooked is the USDM volume of transactions. So we've spent a lot of time on our business development embedding ourselves in the actual products on Cardano. So USDM is being used the most. Now, that's good and bad. There's other tokens that have their primary use case is different. We've tried to become the hub for DeFi, which I think has made us very sticky in the ecosystem. So there's a lot of good pairings with us and various project tokens. USDCX, one area that they shine is off-ramping. So that's why their liquidity kind of shoots up and down, as if somebody sells a bunch of ADA or Night and wants to get off-ramped, they usually exit now through USDCX. And that's fine. That's a better experience. It's lower fees than we have. But we would rather see USDM stay in the ecosystem on chain instead of just always exiting out or being burned. So USDCX has actually helped our business by coming in because they're now a better off ramp than we are. And so our liquidity tends to stay on chain and be a little stickier.
Are there any USDCX, USDCM pools, and what's the situation there in terms of exchanges and things like that? Are people coming through the USDCX into the USDM?
I think so. I haven't looked at the numbers lately, but there are a lot of good pools, and in fact, I think there is a stable swap pool at Sunday Swap that is kind of I don't know exactly how it works, but basically it ensures that even if the pool becomes unbalanced, you have low slippage when you trade on that pool. So trading between the stable coins is usually, I think most of the decentralized protocols on Cardano have pretty much solved for that now. There's still some areas of slippage when trading between, ADA and or Night and the various stable coins. So when that USDCX liquidity came in, most of that liquidity went into a USDCX Night pair. It did not come in, and it did not go on the ADA pair.
I see.
So if you want to transfer ADA out to USDCX, usually you end up swapping through Night.
Interesting. Oh, wow. Okay. Why do you think Night has gained so much popularity on the liquidity side?
I think it's just that's where the liquidity providers wanted to put it.
Okay.
This is pure. We're purely speculating at this point, but they have probably a big bag of Night because they had a big bag of ADA. They see that the upside of Night may have been better, so it made sense to put that liquidity there instead of ADA, which is more of a stable token and not really expected to pump in value. So, or maybe not as much as the upside for the potential Night was.
Now, let's go back to the USDM. I remember talking to the late Matthew Plowman back in Connecticut when I used to live there. and it was just a project on the paper, and I really love the idea of a stable coin that is native to Cardano, that cannot be seized, cannot be controlled. I mean, he had to do something on the KYC when people wanted to mint it, and once it's minted, it was free to go anywhere it wanted, and if I guess this is a better sort of, I think, architecturally and for any freedom-loving person in the ecosystem. If off-ramps and on-ramps are KYC, then why do you have to have also the freezing mechanism? So I was kind of love that kind of structure. Now, is there anything else that sets USDM apart from its peers that might be of value to the users?
Yeah, I think in general, like going back to the early days when Matthew conceived of it, he was really just the type of person, like he saw a problem, he had the right background in finance on Wall Street, and was like, I'm going to pick up a shovel and do it. And that's what he did. He picked up a shovel. He found the right people around him to go and build that out, like Stephen Fisher. He built a lot of the infrastructure around it. They found Matthew Tristan, Pi Lanningham to give some advice on the smart contracts. They kind of built the whole core of the product. And I think it was just that it was first. The other thing that set it apart was the on-chain proof of reserves. So there's attestations twice a day from Charlie 3 that proves that the USDM on-chain is backed by deposits in bank accounts. So that's one thing that's unique. The other thing that I think they're really trying to push for is regulatory compliance. So we're live in a number of U.S. states right now, and we're actively looking to pass audits to get more state licenses, whereas others are just kind of, well, I don't want to talk about their systems. I don't know what they're doing, so I won't say anything about them.
Okay.
But yeah, there's a lot of good stuff we're doing on the regulatory side. Our compliance officer just got his, I don't remember the name of the title, but it's a big compliance certification. He passed his tests for all of that. So that's kind of where we're trying to position ourselves, is we're going to be the stablecoin native to Cardano. Like, we don't have freeze and seize. At the time we launched the token, there was none of those capabilities. So we did what we could, which is KYC at the on and off ramps. And at that point, it's kind of just like cash transactions on the chain. It just moves around. Anybody can see what's happening because it's a public stable coin. And then at the on and off ramp, you can kind of see what happens. We do require disclosure of source of funds for certain levels. If you're off ramping so much, even the big players that come to us that, we know where they got the funds because they minted them originally and they're off ramping, and we still have to tick all those boxes that say, okay, where did these funds come from, and stuff like that.
Okay.
Yeah, so that's kind of where we're at today. We're also looking at doing additional stable coins. We're looking at a Euro stable coin.
Oh, wow.
We're
Tell
looking
me
at
more. Tell me more.
So through our partnership with NBX, they have brought MiCA compliance to USDM.
Oh, yes. I heard that. I need to
So
have them on the show again. But yeah, go ahead.
So they're a co-issuer of USDM. So through their exchange, they can also mint USDM, and you can get it over in Europe. And so that goes through their KYC process, all of their MiCA compliance, all of that. So because of that partnership, we have access to European bank accounts. And so we're looking at doing a Euro stablecoin that will not be co-issued. That will be issued, at least initially, just by NBX. The working, I guess I can tell you guys this, the working name for that is EURN, EURN. So it's like Euro stablecoin, in for NBX, and EARN. And it's definitely not yearn as in urine. It's EARN.
EARN, okay. Well, I mean, it has a twist, which is, kind of popular these days. But I wanted to ask you about the Clarity Act, and if it actually affects you and your business. And I keep hearing that there's a lot of money on the sidelines waiting to enter the crypto trillions.
I hope so.
So do you see on your side, I mean, from a technical point of view, I think you will kind of get a trick, it trickles down to your line of work saying, hey, we need this, we need that, Do you see a lot of pent-up demand waiting on the sidelines to enter?
I mean, as a technical guy, I don't usually see a lot of that. You'd have to talk to our biz dev guy about that. But I hope that's the case. I've heard rumblings of, big players that typically aren't crypto that are suddenly interested in stablecoins. So, people that have dabbled in it, wow, I can send millions of dollars in one transaction and pay 23 cents to do it. Just like between me and my cousin's business, like what? It's crazy.
And it happens like in 20 seconds on Cardano, at least,
Right.
You don't have to wait for all these, don't get me started about the traditional finance.
No, and then I think once they realize you can do that, that'll be very interesting to them. And then once they realize they can do that on midnight, once those capabilities launch, and do it privately, I think that'll be a really interesting value proposition for the big players.
I see. Now, I think the way the version of the Clarity Act that is being discussed is the one where I think most likely we're going to end up with stablecoin yields not being available if you're just holding stablecoins. But if you are deploying into, I believe, it's just a speculation, if into liquidity pools and indexes or protocols that generate yield, then you can basically generate that rewards and make money. Now, assuming that all of those rewards, and I'm speculating here again, that the U.S. government is going to be very incentivized to lower the interest rates. And if the interest rates is, if interest rate hurdle is probably 2 to 3%, for the next 10 years, anything over and above that is secure, that gets generated on the blockchain is going to generate enormous amount of interest. And in your view, is there on the USDM side a lot of integrations, a lot of products out there that could satisfy that kind of demand?
Probably.
Let me ask you this: what is out there? Let's say I have 5 million in USDM. What can I do with it to earn, let's say, 10% annually without risking my principal? Because that's the way that the
simple
think.
The simple thing is lending and borrowing protocols. So there's there's a lot of good protocols out there on Cardano. There's Denogo, there's Liquid, there's Fluid tokens. There's others I'm not even thinking about. You can put it into a pool at Strike Finance. That's kind of the new hotness today. So, I mean, there's risk associated with all of those protocols, just like there is with any DeFi. Each one of those has their own risk profile. So it's kind of up to you what you want to do with that. So I mean, there's lots of opportunity to earn those kinds of yields. Now, when you're talking about Clarity Act specifically, even if that goes through and they say no yields on stablecoins, that doesn't always necessarily mean no yields on stablecoins. There's already ways people have found around that. Like every law has loopholes. So like, for example, you could do a business to business agreement outside of, somebody says, I will bring $100 million worth of liquidity into your token, and then I will, do whatever with that. There's no yield on the token itself, but outside of the blockchain, I want to receive so much of your treasury yield based on me having minted so much of your stablecoin. Like, an external agreement is not the same as providing yield on the token itself.
Oh, I see.
So an individual that is bringing a ton of liquidity could broker some type of a deal like that. And I don't know for sure, but I believe some of the bigger stablecoin players, like I'm sure there's some type of yield agreement between Circle and Coinbase, for example. But it's probably not Circle getting yield for holding their USDC tokens. It's probably some external deal between those two companies.
I see. Now let's switch the gears and talk about a little bit of the things that are really up your domain. Integration. How challenging has it been, and is there a momentum being built around USDM, especially to catch up in terms of integration with USDCs of the world? You talked earlier about USDCX being a popular choice because they have off-ramp possibilities and things like that. What would it take for USDM to get to a point where you would become as easy to onboard and offboard with as easy as USDC?
Yeah, I think it depends on where you're doing the offboarding. So people that go to our site and have already done the KYC, like our offboarding process is very simple. You just send in your USDM, you burn it, and then the minute that the bank transfer goes through, or you can offboard into other stable coins on Ethereum if you want. That's a very simple process.
Nice. Okay. Yeah.
So you can go out to USDC or out to USDT if you want to, just through the app.moneta.global website. There's also things we're working on with partners, dealing with bridging USDM different places. So we're working with a company called Via Labs, and they'll be building the bridge of USDM into and out of Midnight. But at the same time, that company also has experience bridging into and out of Ethereum. So we'll look at that as well. So that's always an option for us to look into. So yeah, that's kind of what we're working on.
Interesting. Now, you mentioned Midnight, and I want to basically ask us several questions about Midnight. What exactly are you doing that's related to Midnight at this point? And what are your impressions about the technology stack and the value proposition of Midnight? Is there a lot of demand? Is there a lot of momentum, technical momentum behind building it out? I know that the mainnet has been out, a early version of it, I would say, because I think down the road we're going to have more validators on this network. But if you could
so right now Midnight is kind of in a hardening, proving phase. So they've launched with a set of federated validators from large trusted companies. So those companies are the ones making the blocks today on mainnet. I do find there is a lot of momentum on the builder side, building on Midnight. There's a lot of builders at Shielded working on it. Some people funded by IOG, and then just community builders. So I'm in the wallets working group at Midnight, and there's, I would say, 10 to 20 different wallets, or at least people exploring building wallets for Midnight. I've got calls with several of them. So let me just go ahead and say we are building on Midnight as well at W3I. We're building a stablecoin called Shield USD. It will be a fully Genius and Clarity Act compliant stablecoin from the beginning. So it will have those freeze and seize features. It will be private though. So everyday users doing transactions, you cannot see what they did, how much they minted, how much they burned. You can see that they minted or burned. You can see that a transaction happened, but you don't know who it went from, who it went to, or how much it was.
Oh, so let me ask you this. If you don't have that kind of granularity of transactions, how do you seize and,
Great
how
question.
do you freeze?
Yeah, so the smart contract is actually smart. It has different roles with it.
Okay.
So inside the contract, when you do something like a transfer, you call what's called a circuit. A circuit you can think of as just a function that runs, and the output of that function is a true or a false, and that's the zero knowledge proof. If it passes true, it lets it update the ledger state. If it's false, it doesn't let it update the ledger state. Now, inside that function, we can force it to do certain things. So like if I'm doing a transfer to you, I prove that I own so much value, like let's say $10, and I prove that I'm going to send you $5 of that, and then I'm going to send $5 back to me. So I've proven that the total amount
And the
is
output?
conserved,
Yeah.
just like UTXOs.
Yeah. Okay.
And then I've proven that I'm sending it to you, and I've proven that I'm sending it back to me. But at the same time, that function requires that I do a disclosure to an auditor key role. So I encrypt some bit of information that says my wallet address to Umed's wallet address, $5. And that gets recorded on the ledger as well. So if I had the auditor key, I can scan the ledger, and as the auditor, I can see that. Now, the auditor role does not have the ability to freeze and seize. The auditor must collaborate with another role that's called compliance officer. The compliance officer, before they're allowed to do anything, obviously, they would have to have, a court order, a warrant, or, something that compels them to do something. Like say, oh, we need to freeze the assets of this drug dealer. Here's their wallet address. So the compliance officer at that point says, okay, I know I need to freeze something, but the compliance officer has no visibility into it. They have to work with the auditor. The auditor then has to share information about that wallet to the compliance officer before a freeze can happen. So a freeze happens at the wallet address level. It freezes all of the assets in a given shielded wallet address. Before anything can be seized, it has to be seized by individual UTXOs. So again, that is something that only the auditor knows. They have to work with the compliance officer to freeze or to seize those individual notes. And then any seized notes automatically go back to a third role, which is the issuer. The issuer is the only one that can mint and burn. And that way, those three roles have to work together and collaborate. That's kind of a check and balance on the whole system for Shield USD.
Okay.
So any frozen funds go back to the issuer. And then if those frozen funds need to be sent anywhere, like to a wallet that's within government control or something like that, then the issuer would have to actually send those funds. So it requires all three people to actually agree and collaborate on doing anything that big and overreaching and big government evil stuff that we don't like, but we have to build it to be compliant with the laws.
No, absolutely, absolutely. And you know, when you have these kind of capabilities of being completely discrete, there has to be, I think there has to be at least a way for the lawful orders to come in and look into things. And here, the emphasis again is on lawful orders and whatnot. But
Yes.
but it's interesting that this product is being built shielded USD, and I'm excited to basically explore the night and midnight protocol and see what we can do. I mean, I definitely own a little bit of night. I mine some of those, every day it looks like there's a lot of new things coming online, and it's interesting to see where it takes. It definitely is a lot of momentum being built around it. I can
Can we talk a little bit about the phased rollout that they're doing?
Yes. I mean, we have like 2 more minutes, if that's okay.
Okay. Yeah. Yeah. So the way they're doing it is we talked about the first phase, which is kind of the controlled phase, and then they'll slowly start decentralizing that. But at the same time, they're looking at the companies building protocols for Midnight, and they're analyzing them based on risk factors. So, if it's low risk, low monetary value, like, oh, hey, I'm building a game or something, you're going to be one of the most early pioneers of Midnight. Okay. If you're building something like a Shield USD, where it's like high value, real money, real risk, everything, they're going to save that to be deployed till a little bit later. So we're not looking to deploy until earliest, late summer, maybe into fall, kind of depending on how the rollout of Midnight goes. So that's their plan, is to kind of slowly add more and more risk into Midnight once it becomes more and more battle tested.
All right. No, we definitely have to do another interview about shielded USD to explore these things, because it's a topic it's a separate topic that can be explored within the ecosystem of Midnight, and I definitely want to pick your brain much more extensively, and we're definitely going to have another episode about that. But before we go, I wanted to ask you if you have any parting thoughts, anything that you wanted the audience to take away from your work, or put some of the stuff that you do in the spotlight. I'll definitely post.
Yeah, I would say the only thing I'd say is get active on Cardano. Mint some stable coins, try out some of these protocols. Like, there's great stuff being built on Cardano. It just needs users and liquidity. And the way we win as an ecosystem, as a chain, is to put that chain to work. And that's the only thing that's going to bring in big institutional adoption, is if they see that retail is already here. So you are retail, get involved.
If you have money.
Even if you've got a little bit, play around with the protocols. It doesn't hurt. If you look at what Strike Finance has done in the last week with their pools, it's like they announced their reward system, and there was a bump or two of some big deposits of USDM, and then it just doubled from all these tiny little $300, $400, $500 deposits.
Yeah, and it's a great.
Try it out.
It's a great product, and I'm glad that it's gaining some traction. But anyway, thanks for coming to Slot Leader. I really appreciate our time. Definitely want to catch up on the shielded USD. I think this is a topic that we can go deep into. But absolutely had a blast talking to you, Andrew, as always, and thanks for coming.
Thanks, Yumin.
Wow, that was a great interview, don't you think? I'm so bummed out that we don't have Tom Flynn with us today. He's traveling for work, so it's understandable. Usually, I have a recap of interviews with him, and we kind of like go into different kinds of like directions after the interview. But today I'm just gonna keep it short. I think this was a very informative interview, and stay tuned for the part 2, because I'm gonna invite Andrew to talk about the Shield USD. I think that type of technology is quite new, and you might be interested in how it works and how it can be used for everyday transactions and in business settings and whatnot. I think, Midnight is a very cool piece of technology, and I would like to probably have more guests describing this technology and talking about how it works on my show. I'll try to get a couple of guests if you guys are interested. Let me know in the comment section below if you want me to cover any other types of topics. But I hope you enjoyed this episode, and I'll see you next time.